Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian stocks were off to a mixed start after the rally on Wall Street that took markets to a record high came to a pause. The Reserve Bank of India has directed banks to disclose overdue loans to IL&FS and the group companies in their notes to accounts in order to prevent underreporting of bad loans. Bharti Infratel has reported a surprise drop in its March quarter profit as the exit of Vodafone and Idea as tenants weighed on the financials. The slowdown in auto demand is likely to weigh on Maruti Suzuki's fourth quarter performance. The company may report a flat to weak quarter. And Axis Bank, which is the other major earning today, may continue on the path of profitability in the current quarter under new management. The lender will report numbers post-market hours today. Let's talk about the U.S. markets now. Wednesday's trading session on Wall Street was volatile as investors digested a slew of corporate earnings, major ones. While the earnings of Facebook and Microsoft were rosy, Tesla disappointed and Boeing suspended its financial forecast for 2019 after grounding of its 737 MAX jets. Renita Young of Bloomberg News tells you everything that you need to know about that Wall Street session in this report.
U.S. markets fluctuated on Wednesday, ending lower as the S&P 500 swung between gains and losses, and investors tried to digest earnings season just a little bit more, as well as economic data. Now, Microsoft earnings just came out just after the bell, reporting upbeat earnings that beat analyst estimates, sending shares soaring in post-market. Boeing, however, different story, missing earnings estimates and suspending its 2019 financial outlook due to the fallout on the grounding of the 737 MAX airplanes, which saw 2 deadly flights that happened within 5 months of each other. Snap's daily active users, revenues beating estimates. Shares, however, were down as analysts expressed concerns about the long-term business. AT&T bleeding subscribers, falling with Caterpillar after reporting first quarter results. Now, Caterpillar had impressive results. However, that wasn't enough to allay investors' concerns about the future of that business. Domino's Pizza up the most in more than 3 years, actually, posting profit and revenue that beat analyst estimates thanks to its tech advancements. And earnings season does continue with Facebook and Chipotle Mexican Grill, among other companies. Meanwhile, the Bloomberg Dollar Index was up a little bit higher, and the U.S. dollar was up versus major currency competitors. WTI was down, gold rising. And by the way, first quarter GDP is due on Friday. That should give us a better view of how the economy reacted to the U.S. government shutdown, as well as the fourth quarter market's rout. And that's a look at your Wednesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right. Well, there's still a strength in the Indian market as indicated by yesterday's close, but let's have a look at how the Asian markets are doing this morning. Perhaps give us some cues going into trade today. Rosalind Chin of Bloomberg News is joining us from the Hong Kong studios. Morning, Rosalind. Just trying to get a sense of how the picture looks this early in the morning. What are you picking up?
Well, if you're looking for cues, they are going to be cues in the red this morning. We've got the regional benchmark, the MSCI Asia Pacific Index, losing more than 1/3 of 1%. In fact, down 0.4% at this moment in time. Generally, not a great picture across the region, I would say. I mean, we have Japan. Trading there is pretty muted because there is a more than week-long holiday coming up next week, and so we're seeing a lot of volumes that are pretty thin there in Japan. Although it is, the Nikkei is just about squeezing out some gains, up by just under 1/10 of 1%, but elsewhere in the region really not looking great. The Kospi is down by about 0.5 of 1%. Hang Seng Index, Shanghai Composite and the CSI 300 all opening in the last few minutes, all lower by more than 0.5 of 1% right now. We haven't had, though, a lot of great economic data this morning to help sort of drive the markets higher. Japan, we're waiting for a policy announcement from the Bank of Japan later on. It's expected to keep policy on hold, of course, with that 2% inflation target, which it's ever further away from meeting. The news conference, of course, will be this afternoon. So that is unlikely really to move the needle on markets, on the stocks there today. We have seen some support from the yen, though, because that has been a little bit weaker. So we have seen some positive trades from SoftBank, Nintendo and Sony among those stocks making gains there in Japan. In Korea, though, not such a great picture there. We saw an unexpected contraction in first quarter GDP, slowest growth in a decade, and that's partly as investments slow. There's also weakness in that all-important tech sector, so that's also weighing on the GDP and also falling exports. Now, we had the finance minister coming out and saying that economic growth will improve in the second quarter. Nonetheless, that isn't doing a lot to lift the gloom around South Korea this morning. Over here in Hong Kong, and in the Chinese markets, we did have the Shanghai Composite opening lower. There not a lot there to move the markets in the region right now. We are looking ahead, of course, to the US payrolls, non-farm payrolls, which is going to come out on Friday, and also the policy decision from the BOJ, which is due later today. And of course, finally, in Australia, the market there and also in New Zealand, those are closed today for a public holiday. So some volumes taken out because of public holidays and also holidays coming up, and the news not really enough to lift investors' mood at this point in time. Back to you.
All right, thanks so much for that, Rosalind. Well, if you've been tuning in every day to listen to us speak to you this in the morning, we've been telling you about crude practically every day, and that is a talking point today as well. On Tuesday morning, in fact, we had told you about Saudi Arabia not wanting to immediately increase oil production in order to meet the shortfall that is expected due to the sanctions on Iran. This was reaffirmed by Saudi Energy Minister Khalid Al-Falih. Al-Falih, in fact, also said that oil is a fragile market and that Saudi Arabia will not leave its customers in the lurch in case they are in need of more oil. Listen in.
I don't see the need to do anything immediately. We're talking to our customers, we're watching inventories, we're going to be talking to other producers, as I mentioned in my statement. In a couple of weeks, we will have a joint ministerial monitoring committee in Jeddah, and many ministers have already reached out to me, and I've reached out to a number of them yesterday after putting out our statement, and we're all in dialogue. They will be in Jeddah. We will decide what we're going to do beyond June. I think the sentiment in general is that we, as oil producers, should never lift our hands off the wheel. Global markets in general, but oil markets in particular, are very fragile, and we have to always keep our hands on the wheel and keep supply and demand closely matched, so that we don't end up in any severe shortages, and certainly we will not get caught up where we got surprised in the fourth quarter last year with an inventory build. But in the meantime, my last word is we will not leave our customers scrambling, not finding the oil they need. And I think we can balance all of those. It's not an easy job, but we'll make sure the oil markets globally, at a global level, remain balanced, and we will make sure the customers and those who want to replace Iranian oils, they know which number to dial, and we're ready for them.
All right, well, that's the picture with regard to commodities, and you'll have to watch. In fact, they were buzzing in trade, commodity stocks. But to tell you all about that, Agam Vakil is here to tell you about the trade setup for the day and also what's happening in the futures and options space. Agam, you can't predict really what happened yesterday, 120 odd points towards the second half. But how are we looking at the start of today?
Well, very, very confusing. I'm sure a lot of traders must be perplexed about what to do with markets right now. But we've always known that the markets are going to be very unpredictable, considering it is election season. And that is what is going to drive cues as well. It's not even institutional flows that may actually lead to sharp moves. But as far as, well, the SGX Nifty futures are showing a negative opening at this point in time. A very sharp up move for the Nifty Nifty up 1.3%. Mid cap and the small cap indices, well, not up to the mark. So a bulk of the gains came from your large caps. The banking indices advancing as well, a lot of strength there. And when it comes to your ADRs, keeping an eye on, okay, so ADR should come in here, Tata Motors, Vedanta, Wipro, and ICICI Bank. Look at Tata Motors and Vedanta. We'll probably watch out for that considering the weakness that we've seen. Otherwise, not too much movement when it comes to your ADRs. But we should have the next thing, and there you have it. This is what I'm talking about. You know, FIIs have come in and around 975 odd crores buying worth coming in as far as FIIs are concerned. DIIs, on the other hand, selling stock worth around 657 crores. Now, we do remember over the past few days, we haven't seen as much traction from FIIs. But what FIIs, it seems, are currently doing is taking every opportunity and every dip in the Nifty to go ahead and buy into some of these large cap names. That said, when it comes to your contributors, well, again, as I was suggesting, Reliance Industries, HDFC Twins, Infosys, all the heavyweights actually providing the bulk of your gains. And this is evident because in the broader markets, there really isn't much happening. But when it comes to the futures and options space, again, it is expiry. It is going to be a very important one as well. Rollovers for now below average at around 58%. But you can't tell as to what can happen in the final couple of hours of trade as far as expiry is concerned. Nifty banking rollover standing at 56% as well. But moving on to your open interest distribution, this is of course for the current, I would say, well, today, considering today is expiry, so we're keeping an eye on 11,700 because that's where around the SGX Nifty is, as one might expect, considering the Nifty moved above that mark. We saw unwinding in the 11,700 call. But they're coming to the India Volatility Index. Finally, just a little bit of a let up at around 23.7. It's still at heady levels, there's no doubt about that. But moving on to your Nifty put call ratio, and that's at around 1.65. Once again, climbing to lofty levels, but around 1.3. A bunch of stocks which are in the F&O band: Adani Power, DLF, and IDBI Bank. And we also have Vodafone, Idea, Jet Airways, and Reliance Power. Moving in, we do have PC Jeweler, which is moved out of the band. So, well, this one's a free hit for whoever wants to long or short PC Jeweler for only this expiry or perhaps a few days to come ahead. And of course, we don't have too much in terms of additions. So let's talk about some of the other movers. Keeping an eye on something like an REC, Century Textile, Kaveri Seed Company, all have advanced. So possibly longs building into the May series. But again, Alex, is going to be more about stock-specific movement than the index, considering it's already run up. We're watching out for the index too, though.
Thanks so much for that. Well, let's have a look at what's making headlines across the globe. Ed Ludlow of Bloomberg News brings you the first word headlines.
South Korean finance officials are holding an emergency meeting after GDP shrank the most in a decade. First quarter figures shrank 0.3% from the previous 3 months, missing estimates for a similar sized gain. The Bank of Korea has already reduced its 2019 growth forecast to 2.5%, and the government has rallied to boost confidence with an additional budget. Chinese Premier Li Keqiang says he's willing to build stronger ties with the IMF. He met Christine Lagarde in Beijing ahead of the second International Belt and Road Forum. Li said China will continue to deepen reform and expand measures to open up its economy. Lagarde also met President Xi Jinping and PBOC Governor Yi Geung ahead of the forum, which begins later Thursday. President Trump is said to have indicated U.S. support for an assault on the Libyan capital, Tripoli. Sources say he spoke to militia leader Khalifa Haftar and backed the drive to topple the current UN-backed government. An earlier phone call with National Security Advisor John Bolton is also said to have left Haftar with the impression of U.S. support for an attack. However, a White House spokesman says the description of the calls is inaccurate. Global News 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ed Ludlow. This is Bloomberg.
All right, let's move to a coverage on earnings now. Let's start with Bharti Infratel. It reported a weak set of numbers in the fourth quarter with an unexpected decline in profit. Well, the telecom infrastructure player also witnessed the sharpest fall in revenue in almost 6 years. Somit Sarkar is here to tell you all about that. Somit, well, expected because of the exit of Vodafone and Idea, but is it more than expected, worse than expected, the impact?
Well, yes, the impact was actually much worse than what the street was anticipating. Now, if you see overall, the numbers were weak. Now, the revenue was down by nearly 1.1% to close to 3,600 crore rupees. EBITDA was, however, higher by nearly 1.4%. The margins expanded to 42.6%, and the net profit, that declined by nearly 6.3% to close to 608 crore rupees. Now, the revenue drop of 1.1% was the biggest drop in the last 23 quarters seen by Bharti Infratel. Now, in the fourth quarter of financial year 2019, if you see on a net basis, close to 1,725 tenancies were cancelled, while the tenancy ratio remains stable at close to 1.88 times. Now, lower revenue due to tenancy exits and lower finance income weighed on the fourth quarter of financial year 2019. Now, some of this, however, some of this was offset by higher energy margins and higher exit charges that the company received in the fourth quarter of financial year 2019. Now, the finance income, now that dropped to nearly 24 crore rupees from 60 crore rupees in the last quarter, while the company received a tenancy exit charges of close to 100 crore rupees in the fourth quarter. Now, due to lower energy costs and higher energy reimbursements, the energy spreads increased to 11%, which was the highest ever energy spreads reported by the company. If you see the rent per operator per month, now that remained largely flat at close to 39,600 rupees, and the full impact of the tenancy cancellation is also yet to come for Bharti Infratel, because nearly 4,300 tenants which have served the exit notices continue to remain on the network and continue to generate revenue for the company. So this impact will be seen in the coming quarters. However, something to cheer for the investors was the announcement of dividend that the company did. Around 7.5 rupees dividend per share was announced by the company, which results into a dividend yield of close to 2.5% at yesterday's closing price.
All right, thanks so much for that, Somit. Well, the country's largest car maker will be the first from the auto industry to report earnings in the first quarter. The slowdown in demand is expected to reflect on its numbers. Yatin Mota sums up the expectations.
Well, the fourth quarter has been challenging for the auto sector in general, and Maruti Suzuki, being the market leader in the passenger vehicle segment, would also face some headwinds from slowing sales. If you look at the fourth quarter, we have seen a decline in Maruti volumes by nearly 0.7%, and that will clearly translate into pressure on the top line, which is expected to remain almost flat on a year-on-year basis according to the Bloomberg poll. We are expecting the revenues to be in excess of 21,450 crores. EBITDA, however, would be under pressure given the fact that the discounting also was quite high during the fourth quarter because of the sales push companies were taking in order to reduce inventories. EBITDA for Maruti is expected to decline by 11% on an absolute basis. Profits also are seen declining by 14% for the fourth quarter year-on-year. Margins will be important to watch out for. The Bloomberg poll is suggesting a margin figure of 12.5%. That will be a decline of almost 200 basis points from the previous level of 14.2%. Of course, apart from the weak operating performance, the key issue to watch out for will be the management commentary in terms of demand. The dealers are hopeful that there could be some pickup post the elections, and clearly the management commentary on demand scenario, especially in the rural and urban areas, how is it expected to be moving forward, is something important that we'll be watching out for apart from the fourth quarter earnings in Maruti.
All right, well, moving on. Tata Steel sales volumes may have jumped over 25% in the March quarter, but that's unlikely to reflect on the bottom line. Nikki Mirchandani is standing by to tell us why. Nikki, what's likely to weigh on the bottom line?
Well, there are many moving parts to this. We'll first address the basic numbers. We're looking at a 21% growth on the top line front at a number of around 43,725 crore. EBITDA, we're seeing a flattish. We're expecting to see a flattish growth out there, just 4% uptick at a number of around 6,739 crore. And in terms of margins, we're actually expecting a contraction coming in out there on account of the various business that we've seen Southeast Asia Asian business typically not doing well. Also, the Bhushan Steel performance was not that encouraging when it delivered the number. But I'm going to address the volume growth first for the Q4, which in India business was up 56%. In terms of the European, in quarterly YOY basis, that was almost flat. And for Southeast Asian business, that was rather down by 5%. Weak spreads along with the lower scale is expected to weigh on the operational performance for Tata Steel. Margins are expected to be weighed down by the poor performance of European and Southeast Asian business. European EBITDA per ton is seen contracting to $50 per ton from $70 per ton. That's a nearly 28-30% kind of downtick there. Bhushan Steel EBITDA per ton has already been reported and the numbers were down by 16%. In terms of standalone basis, we're looking at a downtick coming in at the rate of around 16%, and the number that we like to watch out would be in the range of around 11,000 to 13,044 per ton. Key things that we like to watch out would be how typically the standalone business is doing and the volumes thereon, global iron ore prices and the outlook, and also the impact or any commentary coming in on the steel prices. Back to you.
Thanks so much for that, Nikki. Well, let's turn to the big bank that will report its numbers post-market hours today. I'm talking about Axis Bank. It may return to profits in the Q4 as its asset quality starts to stabilize. Darshan Mehta is standing by with what is expected. Darshan, consolidation under the new management, but what are the key highlights that you're expecting?
Yeah, so basically I think the management commentary will be very important. Over the last few quarters, they've managed to improve significantly. So the NI growth, we are anticipating close to a 23% NI growth that will come in. As far as the profit is concerned, a 1,600 crore profit compared to a 2,000 crore loss that we saw last time around. We see a 16% loan growth and a 20% deposit growth. We'll see growth coming in the retail and the SME segment. So there is traction. What other things that we need to watch out for? Margins will be stable at around 3.5%, and the fee income is seen at almost 2,700 crores. What are you watching as far as the slippage is concerned? Anywhere between 2,400 to 3,000 crore slippages is seen, and no major issues as far as asset quality this time around can be anticipated.
All right, Darshan, well, those are the big earnings that we're expecting, and obviously we're going to have to watch out for them in trade. But what else is in the stocks and news?
Yeah, so watch out for some of the results that came out after market hours. Indiabulls Housing Finance, not the best set of numbers. NI was down 1%, profit was down 7%. The asset quality weakened with the rise in NPAs this time around. Pickup was seen in disbursement in the Q4, but growth was still weak. If you take a year-on-year figure, disbursements were down almost to 60%, with the loan book dropping 17%. What's important to watch is the merger with the Lakshmi Vilas Bank and whether they get a banking license. M&M Financial, decent set of numbers. NI up 27%, profit up 87%. The asset quality improvement led to an earnings beat. Disbursement points to a slowdown and a cautious stance, but the management is very confident of delivering meaningful higher growth. ICICI Prudential Life Insurance, mixed set of numbers. The VNB growth lagged due to weak premium growth. The flattish growth was seen as far as margins are concerned. Premium growth was up 11% with persistency ratio at 86%. The management indicated an aspiration to double the VNB in the next 3 to 4 years. Syngene, decent set of numbers. Revenues up 30%, profit up 18%, EBITDA up 71%. Both Discovery Sciences and Development, both of them led revenues. Shriram City Union, even though the NI was up 10% and profit was up 11 times, and that was on account of an exceptional last time around, numbers still coming in below what the street was anticipating. Agrotech Food, weak set of numbers. Revenues were down 7%, EBITDA was down 6%. The profit was higher on other income. A couple of other stocks, watch out for some of the banks in focus. RBI has asked banks to disclose the exposure to IL&FS. Ipca Labs will be in focus. They acquired a stake in Ramdev Chemicals for 108 crores. And Indiabulls Real Estate will be in focus. They have said that in terms of clarification, in terms of whether they want to sell stake in the company, they are engaged in the business reorganization exercise for some time, is what the management has indicated.
All right, thanks so much for that, Darshan. Well, if you want to read a little bit more about all of those points that Darshan just mentioned, you'll find the story on the website in All You Need to Know. For now, let's talk about something else that's very real and is probably going to change our lives forever. Climate change is fast depleting the world's ice caps, and polar bears are one of the animals that are adversely affected by this. They can often be seen wandering vast distances in search for food. In Russia, one such lost, hungry polar bear was finally able to return to its home 400 miles away, only with a little help from the Russian authorities. Take a look. All right. Well, I told you about all you need to know, which you'll find on the website bloombergquint.com. There's also several other stories that are there that you should consider reading this morning. First up, two potential bidders, Suraksha Asset Reconstruction Company and NBCC, have submitted final resolution plans in the second round of insolvency proceedings for JP Infratech. That's according to two people who spoke to Bloomberg Quint and asked to remain unnamed. A third interested party, which is Adani Infrastructure and Developers, which had submitted a late expression of interest for JP Infratech this month, was not allowed to submit a final resolution plan. And the Reserve Bank of India has directed banks to disclose loans to the IL&FS group that are overdue in their notes to accounts. The directive followed an order by the National Company Law Appellate Tribunal in February that asked banks to not tag loans to IL&FS and its group companies as NPAs without the court's permission. All right, that's all you need to know going into trade today. Do stay tuned. As I said, over the course of the day, there's a lot more coming up on Bloomberg Quint.